Good evening, guys. Welcome back to my live streaming. I hope you guys are doing pretty well. What a big day tomorrow. CPI. Let me pull up here the live chat. There you go. So, today the markets went up. We had a green day across the board. It looks like the markets are kind of front running what might be potentially front running what could be potentially a better than expected CPI report tomorrow. I have some interesting information for you when it comes to what could be happening, what could be potentially happening tomorrow. So today we had a green day across the board. Russell 2000 goes up 1.23%. The NASDAQ goes up 1.27%. Dow Jones up 0.71%. And the S&P 500 went up 1.06%. The US dollar, the VIX, goes down today. Not much, but it went down 0.60%. Therefore, we had crude oil going up 1.37%. Gold goes up 0.47%. Silver goes up 5.32%. And here we have some sort of question mark on the table. The 10-year Treasury yield went on an absolute tear today, guys. It went up 1.23%. And you guys know that the 10-year Treasury yield is an inflation indicator. So why is the 10-year Treasury yield, or TNX, going higher a day before we get the CPI of August? So someone is lying over here, and this is a question mark. This is a question that is going to be answered in tomorrow's trading session. If we take a look at the sectors of the markets, green day across the board. The 11 sectors went up today, led by energy, goes up 1.84%. The gold medal goes for technology, goes up 1.60%. And the world's performing sector today was a very defensive sector. Consumer staples goes up 0.39%, but there's nothing to complain about the sectors. We had a very solid day across the board. And if we take a look at the advancers and decliners distribution, very solid day as well, guys. Today we had 4,420 stocks going higher and 2,150 stocks going lower. So very solid day across the board. And now, obviously, what's up, Drew? How are you? Good evening, bro. The big question is, are we going higher tomorrow? Once the CPI is released, are we going lower? What is going to happen? The markets have been going on an absolute tear, guys. Take a look at a chart of the S&P 500. Let me pull up here the 5-day, 5-minute chart and take a look. So in 1, 2, 3, and 4 trading sessions, the S&P, let's say 5 trading sessions, the S&P has gone up 6%. So the markets seem to know, or seem to be kind of realizing, that the CPI is going to be better than expected. And the only, let's say, question mark that I have as of now in my mind is the fact that the 10-year Treasury yield went on an absolute tear today. This is an inflation indicator, and it went up along with the tech sector. And these two are usually not correlated. Let's just put it that way. So when it comes to the CPI, what are we waiting for tomorrow? So the headline inflation is expected, the year-over-year reading is expected at 8.1% versus 8.5%, which was the previous reading. And the headline inflation year-over-year, including energy and food, is expected at minus 0.1%. However, the most important metric that we need to keep a close watch on tomorrow is going to be core CPI, which excludes food and energy. So core CPI month over month is expected at 0.3% versus 0.3%, which was the reading that we got last month. So what do you guys think? Is the inflation reading tomorrow going to be better than expected, worse than expected? What do you think? Drop me a comment over there and let me know. I have some interesting information when it comes to the inflation reading that we are going to get tomorrow. Keep in mind, guys, that the Federal Reserve of New York lowered its inflation forecast for next year today from 6.1% down to 5.8%. So that's also a positive aspect for the bulls into the CPI tomorrow. By the way, before I show you this information, let me show you the estimates of the banks. So we have a bunch of banks trying to guess what is going to happen tomorrow with the report. Out of all of these banks, the let's say worst scenario is being put on the table by BMO, which expects the headline reading at 8.3%, followed by Bank of America, 8.2%. But if we, let's say, take a general look at these estimates, we can make the case that most of the banks are expecting a better than expected reading. Credit Suisse, 7.9%, Wells Fargo, 7.9%, Goldman Sachs, 8%, Jefferies, 8%, Visa, 8%, Citi, 8%, JP Morgan, 8.1%. So if this were the case, we can expect the markets probably, okay, to rally tomorrow after the report comes out. However, and as I just showed you over here, guys, the markets have gone up a lot during the last 5 trading sessions. So did the markets already price in a good inflation report? And maybe we could see tomorrow some sort of buy the rumor, sell the news. So that's a matter. That's a possibility that we must keep on the table. So let me show you some interesting stuff when it comes to the report itself. So take a look at freight costs. So they have been easing since August of last year, and we can make the case that they have been dropping, that freight costs have been dropping like a rock, and this is very positive inflation-wise, obviously. And take a look at this chart, guys. Because as of now, you guys know that obviously energy is a very important component inside the CPI report, and the prices of gasoline have been falling like a rock. So here you guys can see how gasoline has been going lower, or has gone down 25% in 85 days. And now the question is, what usually happens with the CPI report when the prices of gasoline go down? So take a look at these other two charts. So during the decade from 1972 up to 1982, most of you guys weren't even alive way back then, but these were very difficult years inflation-wise here in the US. And take a look at how the prices of gasoline did nothing but going up during 10 years. However, take a look at this other chart on the right side of your screens. So from 1970 up to 1990, whenever the prices of gasoline flatten out, take a look at what happened with CPI. So on the top of this chart, you guys can see the price of gasoline. And on the bottom of this chart, you guys can see the headline CPI, which is one of the readings that we are going to get tomorrow. So whenever the prices of gasoline flatten out, the CPI report itself dropped like a rock. And as I just showed you guys, the prices of gasoline have been going down for 85 days. They have dropped 25% in 85 days. So we can make the case that the odds are in favor of the bulls into tomorrow's CPI. So are the markets going to go higher or lower once the report comes out? That is something that we are going to be finding out tomorrow at remember, 8:30 a.m. That's the time in which the report is coming out. This is a 4-hour chart of the S&P 500. We have been going up a lot. As I just showed you guys, during the last 5 trading sessions, the bulls managed to burst above this trend line that comes from a previous area of resistance back from mid-August. So this was a huge win for the bulls in today's trading session, and they also managed to close the trading session slightly above the lower pivot back from February of this year. This was the lower pivot that the bulls found support at, as I just told you, back in February of this year. So this was very positive for the bulls. If we take a look at the RSI of the S&P 500, it is sitting at 68 points on the 4-hour chart, a bit elevated, but the S&P is not very overbought as of now. And if we take a look at the RSI chart of the S&P over here, we can see that a few weeks before, with the S&P 500 trading on good volume and momentum, we have seen the RSI of the S&P pretty much 79 points. So we can make the case that the bulls, if the reaction of the markets happens to be positive tomorrow, once the CPI is released, we can make the case that we still have a big gap to the upside up to 4,170 points, which happens to be a previous resistance back from early August. And this is also a previous resistance back from early June. If the bulls of the S&P were able to make this push to the upside, we are looking at a push of almost 1.20, 1.30%. So that would imply that if the report happens to be welcomed by the markets, we can still see another positive day in tomorrow's trading session. What happens on the flip side? If the reaction of the markets happens to be negative, I think that maybe the bulls can pay a visit down to the 100-day moving average near 4,018 points. And when I say negative, guys, what are we looking at? What a negative report of the CPI is going to be looking like. I would say that you need to keep a close watch on the core CPI, and I just told you that that report is being expected at 0.3%, reflecting an increase month over month of 0.3%. So if we happen to get a reading of 0.4%, 0.5%, 0.6%, then the markets are very likely to take a hit tomorrow. So that might be an opportunity in order to get puts of the SPY or the triple Q. Keep also in mind, guys, I don't know if you know what the quadruple witching is, because on Friday we have quadruple witching, and weird stuff happens when we have quadruple witching in the markets. Quadruple witching is for the most part a day that occurs 4 times a year, and during those days we have a massive expiration of options, of futures, indices, and stocks. So that's a day in which the markets behave in a very volatile way. So that is something that you also need to keep in mind throughout this week. Quadruple witching. And I guess that most of you guys know what quadruple witching is, because no one is asking about the quadruple witching. And now I lost over here, guys, the live chat. There you go. Let me pull it up again. So, do you guys have any questions about the CPI report? Do you guys want me to go over any given stock or any given index? I am here to help you. We have Drew over here, and in the meantime, I am going to take a look at the earnings report of Oracle. This company just posted earnings. For the most part, throughout this week, guys, the only 2 important earnings reports that we're going to have is Oracle and Adobe post earnings on Thursday. Other than that, for the most part, the earnings season is over, and we're going to have to wait until October 17, when the new earnings season kicks off with JP Morgan, October 17th. That is going to be very important. So, OJ, what's up, bro? Amazon, Mr. Max, Google, Mrs. Vice, Tesla. Okay, let's go over those stocks. Let me go ahead and take a look quickly, guys, at the earnings report of Oracle. Let me see what they did. And you guys, please throw me a comment down below and let me know what stocks do you want me to go over, and I'll do it right away. So EPS came in at $1.03. Okay, so EPS came in at $1.03, missing the estimate of $1.07, and sales came in at $11.45 billion, missing the estimate of $11.46 billion. So this wasn't a good report of Oracle. Do I have any guidance related information without the impact of US dollar strengthening? Reported Q1 GAAP and non-GAAP EPS would have been 8 cents higher. So Oracle is saying that the strength of the US dollar, of the Dixie, affected them in a negative way. And I think that the stock isn't doing much after hours. Let me see here the 1-day, 1-minute chart. Now it is pretty much flat. So not a good report. Oracle is pretty much going to depend on whatever happens with the markets tomorrow as a whole, in order for this stock, for the stock of this company, to pick a direction. So I am going to be keeping a close watch on this 100-day moving average tomorrow near $73.40. This area, $73.50, is also a previous resistance back from early June. This is also a previous support back from early March that, if happens to be visited, could be providing support for the bulls of Oracle. Okay, Amazon, my friend OJ, he wants me to go over Amazon. Okay, let me go ahead and take a look at Amazon. I was about to grab Google calls today, mind you guys. I closed a trade on Tesla. I made like $240, and I re-entered Tesla once again at an average cost of $304, and I am holding those shares overnight in case, you know, the markets rally if we happen to have a better than expected CPI report. Amazon, a bit overbought. We can see the RSI on the 4-hour chart sitting at 76 points. The bulls managed to hold today as support this 180 SMA on the 4-hour chart near $134. $134 is also a previous support back from early August and also back from early March. So any visit of Amazon down to $133 might be a buy, guys, if obviously we are not going against the intraday direction of the markets. This is a very important spot. The next gap for Amazon is going to be up to the 200-day moving average at $141. So watch out for Amazon tomorrow, filling this gap from $136 up to $142. This would be a push to the upside of 3% if, obviously, the reaction of the markets happens to be positive. On the CPI report that we are getting tomorrow, we are seeing the 5-day moving average starting to rise. That's a very good sign for the bulls. We also can see Amazon above the 100-day moving average, 50 SMA, 180 SMA on the 4-hour chart. So this is a technical chart that is starting to look interesting, to me at least. Let me take a look, guys, by the way, at the market structure of Amazon. This is very important, guys. And I have told you on several occasions that when you take a look at a technical chart, you guys can see areas of support, resistances, moving averages and stuff. But you cannot see exactly what the market structure is looking like. So that's why I use this website, Market Structure Edge. This is a very powerful tool that I use on a daily basis in order to determine what the demand and the supply of any given stock is looking like. In the case of Amazon, we have a rise in supply and a rise in demand, but as of now, the supply is above the demand, so this is not the best looking market structure that we can have. But buyers are starting to show up over here. This blue shaded region is it represents the demand, and the purple shaded region represents the supply. So the fact that the demand was very low and that now is starting to rise is a sign that the buyers are starting to show up, and that's a good sign for Amazon in general terms. Tesla, $304 is a very important spot for Tesla. Let me go ahead and take a look at Tesla, my Tesla over here. I just told you guys I closed a winning trade today on Tesla that I showed you on my channel, by the way, and I re-entered my position because $304 is such an important spot for Tesla. So take a look at $304, guys. At $304, Tesla found a big resistance back on August 25th, and Tesla also found support at $304-ish back on August 16th. So this is a very important spot. If I pull up here the 4-hour chart, we can see that Tesla is a bit overextended. Yeah, it is overbought as of now. The RSI on the 4-hour chart is sitting at 77 points. However, you guys know Tesla. This is a stock that when trades on good volume and momentum, it can trade with its RSI signaling very high levels. So the next resistance for Tesla, and this is the trade that I am planning on taking over here, would be at $314. So I am expecting Tesla, and obviously depending on the CPI report that is coming out tomorrow, if the reaction of the market happens to be positive, I think that Tesla has a decent chance of filling this next gap up to $314, which happens to be a previous resistance back from mid-August and also a previous resistance back from early August. If I were able to take this trade the way that I am describing it over here, this would be a 3% profit trade. I purchased 50 shares, so this would be the trade of the session for me. Very positive. The bulls reconquered today the 200-day moving average. We are, as of now, above the 180 SMA, 50 SMA, and we have a rising 5-day moving average. So Tesla seems to be about to be, no pun intended, off to the races, guys. So if $304 happens to be held as support, watch out, because $314 could be coming up for Tesla, my Tesla. The only negative aspect that is worth to be pointed out over here is that, yeah, Tesla is a bit overbought. We can see the RSI sitting at 77 points. Let me take a look at the market structure of my Tesla. What is going on over here with the market structure of Tesla? Alrighty, let me see. So 1.8 out of 10, as you guys can see over here. And we have a rise in demand and a rise in supply as well, but demand was falling and now is starting to go up, and that is very positive for the bulls. ENPHASE Energy, Shane McGee. Let's go ahead and take a look at ENPHASE. Good, absolutely. Right away, what is going on in the case? This is a beast, guys. This is a stock that I had on my watch list today, and $308 is a very important spot. ENPHASE went up today 1.06%, and it closed the trading session at $308.93. So watch out for this area, guys, between $308, $309. Very important spot for ENPHASE. And why? Well, because we are talking about a former resistance back from mid-August and also back from early August, in which ENPHASE failed on 3 occasions. So watch out, because the RSI of ENPHASE is at 57 points, so we can make the case that ENPHASE is neither oversold, neither oversold, not overbought, which is very positive. So if the bulls of ENPHASE start to consolidate slightly above a previous area of resistance at $308, this might be a sign that they are gathering momentum in order to make another push higher and maybe being able to fill the next gap up to all-time high at $325, which was hit back on September 8th. So if we were able to take a trade on ENPHASE, guys, from $310, $311 up to all-time high $325, this would be a 5% profit trade. And mind you, we could also short ENPHASE. If the bulls fail at bursting above $309, this would easily be a short down to the 50 SMA on the 4-hour short at $295. Am I going to do short ENPHASE over here? I don't think so, guys. This is a beast, an absolute beast. Clear uptrend. We have a rising 5-day moving average. ENPHASE is way above all the moving averages. It is not even overbought on the 4-hour short. As I just told you, the RSI is sitting at 57 points. This is not a stock that I am going to be shorting. So I would rather go long ENPHASE if $308 or $309 happens to be held as support. Let me take a look at the market structure of ENPHASE. What is it looking like? It gotta be a nice market structure, I'm thinking, right? This is a beast. I mean, most of the renewable energy stocks have been going bananas, guys. 6 out of 10, and we have a rise in demand and a fall in supply. This is very, but very positive for ENPHASE. So as of now, from a market structure standpoint, guys, we have more buyers out there relative to these sellers. Very, but very good signs for ENPHASE in general terms. Anytime, my bro, Mrs. Vice. Okay, well, Oxy also. Mr. Max says, okay, Oxy. Occidental Petroleum, full disclosure, I own Occidental Petroleum calls, guys. I gotta be honest with you. I think that oil is going higher. So Oxy went up today 1.81%, and it closed the trading session at $66.80. And actually, the energy sector was the best performing sector today. So that obviously helped Occidental Petroleum. The bulls were able to hold that support today once the trading session started out. the 5-day moving average. That is very positive. So if the bulls can consolidate slightly above the 5-day moving average, this might be a sign that they are gathering momentum in order to make another push higher and maybe being able to fill the next gap up to $71. $71 is a previous resistance back from early June. If Oxy were able to make this push to the upside, guys, let's say that tomorrow we pick up some shares at $67. I mean, I already on calls. I'm talking about you guys. If you're able to start this trade near $67, $67.50, and if the energy sector keeps on going higher, which is going to depend on the CPI report, if the CPI report happens to come out worse than expected, we can make the case that the inflation trade should perform well. And that is going to be a tricky one, because we can also make the case that if the report happens to come out, the CPI report happens to come out worse than expected, then we can also make the case. We have arguments over here for both bulls and bears. So we can also make the case that the Fed is going to be way more aggressive hiking rates, and that the Fed isn't going to be able to engineer a soft landing, and that we are going to go through a deep recession in the US, and that the aggregate demand is going to collapse, and that is going to bring even lower the prices of oil. So the energy sector is going to be tricky tomorrow, but nevertheless, whenever, and this is the point that I want to get across here, guys, whenever you're about to take a trade with any oil-related stock, you need to keep a close watch on the energy ETF, XOLE. So if you happen to double check on XOLE, so if you see the energy sector going higher, then this might be a trade from $67.30-ish up to $70, which is the next gap that the stock of this company needs to fill to the upside. This would be a 5.74% trade, very solid trade. So $71 is a previous resistance in which Oxy failed on multiple occasions back in early June. And this is a very good looking chart. Mind you guys, by the way, Oxy is in an uptrend, holding as support the 200-day moving average, the 100-day moving average. The 100-day moving average acted as support last week. The bulls closed the trading session today above the 5-day moving average. So this is a very good looking chart. RSI on the 4-hour chart at 48 points. Let me go ahead and take a look at the market structure. But yes, this is a stock that is going to be heavily affected by the CPI report tomorrow. So in normal market conditions, guys, in front of a worse than expected CPI report, the inflation trade, when I am talking about the inflation trade, I am talking about the industrial sector, I am also talking about materials, and I am talking about energy. Those sectors should go higher. But we are in a very tricky situation as of now, because inflation is very high and the Fed is very hawkish as of now. So if the report happens to come out worse than expected, then we can make the case that the Fed is going to induce a recession in the US, and that is going to affect the aggregate demand for energy or for commodities and stuff like that. So this is going to be a tricky one tomorrow, but you need to keep a close watch on the energy sector. Occidental Petroleum, this is not a good market structure, even though the stock of this company is still in an uptrend, but we have a fall in demand and a supply that is way above the demand. So this stock is going to depend on whatever the reaction of the markets looks like tomorrow once we get the CPI report. There you go. We also have over here Meta, says Guy Dibui. Let's go ahead and take a look at Meta. Let me see. So we are 20 minutes in, I think, guys, right? Still have 30 more minutes. 30 minutes, okay. We are 28 minutes in. I can still go over some stocks over here. I still need to film my daily video in Spanish, guys. And I just finished live streaming that lasted 7 hours for my patrons. So it's been a long day. I still have some stuff to do over here. Meta goes down today 0.11%, and it closed the trading session at $168.96. So I was telling the guys of my Patreon, guys, that in my opinion, $172 was a short in the case of Meta. This is going to be a very critical area for the bulls to burst above it. $172 is a previous resistance back from early July, and this is also a previous resistance back from mid-June. So any test of Meta, guys, at $172, and if you happen to confirm from a technical standpoint that that's let's say a test that is about to fail, might be a short for the stock of this company. However, if we happen to see a further pullback in the case of Meta, which didn't go down much today, only 0.11%, $160 is an area in which, and despite the fact that we have a very ugly looking chart over here from a technical standpoint, $160 is, in my opinion, an area of interest. $160 is a previous support back from late August, and this is also a previous support back from late June. So any visit down to $160 is an area in which I am going to be tempted in order to buy the dip from $160 up to $173-ish. This would be a 7.76% trade. Sorry, 7.76% trade. And watch out for this area. Big level for Meta, guys. $173. This is an area of interest. If the bulls of Meta fail at bursting above this area, I think that this is a screaming short trade, either borrowing shares of Meta or maybe getting puts of the stock of this company. Anytime, my friend, Mr. Max. What else do we have over here? Apple, DraftKings. DraftKings has been going on an absolute tear. Let me pull up DraftKings over here. Up to date, 3.23%. And DraftKings has been going on a tear, guys, basically because the new football season already kicked off. And we can obviously make the case that the amount of bets, let's say that the percentage of gambling that is taking place on DraftKings is going to increase dramatically. So very good day for DraftKings. Goes up 3.23%, closes the trading session at $18.20, a bit overbought on the 4-hour chart. You guys can see the RSI sitting at 75 points, and we have a big test for the bulls of DraftKings coming up, guys. $18.73. This is the 200-day moving average. Very big level for DraftKings. If the bulls cannot burst above $18.73, I might be getting puts. $18.73 also happens to coincide with a previous support back from late January. This is an encouraging looking chart. We have DraftKings as of now showing very important signs of recovery above the 100-day moving average, above the 50 SMA, above the 180 SMA. We have a rising 5-day moving average. DraftKings closed the trading session today above VWAP. So we have very good signs, but this is a very big level for DraftKings, $18.80. So watch out for this area, guys. If the bulls can burst above it, then there's another gap that could be potentially being filled up to $21.32, which happens to be a previous resistance back from mid-August, and this is also a previous resistance back from late March. But if the bulls fail at the 200-day moving average, then you guys know that we might be able to grab some puts. I'm curious about the market structure of DraftKings. Let me take a look at it. Let me see, DraftKings, okay. So 1.8 out of 10. And we had 0 buyers showing up in the case of DraftKings recently. And now the demand is starting to go higher. It is still below the supply, but buyers are starting to show up. But we can make the case that as of now, from a market structure standpoint, the sellers are in control of this technical chart. So this is going to be a big test for DraftKings at $18.80. And Apple. Let's go. Let's wrap it up, guys, with Apple. So what is going on over here with Apple? This was absolutely insane today, guys. Apple went up today $6, and it went up 3.85%. A monster move to the upside in the case of Apple today. So we can make the case that Apple is due for some sort of pullback or for some sort of profit taken. The stock of this company closed the trading session today at $163.43. The bulls managed to close the trading session above the 180 SMA on the 4-hour chart. This is positive. Above $162.89. We have over here a death cross with the 50 SMA crossing below the 180 SMA on this chart. So if the bulls cannot hold this 180 SMA as support, this death cross might still be on the table for Apple. But take a look at how the bulls held this 100-day moving average as support a few days ago near $153. So obviously, you guys know that Apple is the most important stock of the stock market by a long shot, and we have a big level coming up for the bulls of Apple near $165. This is an area in which, taking into account that the stock of this company is very overbought, with the RSI sitting at 73 points on the 4-hour chart, this might be an interesting area in order to grab puts. $165 happens to be a previous support back from early April, and this is also a previous support back from mid-February. So either the bulls take out $165 and they fill the next gap up to $168. This is a previous resistance back from early August, or the bulls fail at bursting at $165, and maybe we see Apple dropping down to $160. $160 is a previous support back from early August. So very interesting looking chart as of now for Apple. After the monster move, after the monster push that we saw today to the upside, we can see over here an ascending 5-day moving average. This is very positive for the bulls. The bulls reconquered the 200-day moving average. They held the 100-day moving average as support. So this is a very good looking chart. So don't be surprised that despite the fact that we can see an overbought reading over here on the 4-hour chart, don't be surprised if the bulls of Apple take out $165 and they fill the next important gap up to $168. And what's the market structure of Apple looking like? Let me see. Apple Inc. Where is Apple? There you go. Here it is. Before I wrap it up, guys. Okay, Apple. Let me see. 1 out of 10. Ooh, we have a very weak market structure, guys. 1 out of 10. And we have a rising supply that is way above the demand. So from a market structure standpoint, guys, I think that this test at $165 is going to be unsuccessful, and I might be grabbing puts near that area. Okay, guys, I am going to wrap it up over here. Remember, I am going to be live streaming for you Mondays and Thursdays as well at around 4:40 p.m. So be there. I am going to be here to answer your questions from a technical standpoint, from a financial analysis standpoint. And I am also going to be available, or I am going to be here for you guys in order to go over the stocks that you want me to, or that you ask me to. So thank you very much. Tomorrow is going to be a very important day for the markets. So manage your risk. And that's it, guys. So thank you very much for joining me today. Mr. Max, Guy Dibwe, Drew Bider, Shane McGee, Dominic 101, Alejandro Salcido, Mrs. Vice. So thank you, guys, and see you on next Thursday. Okay, bye. Take care. Enjoy the rest of your day, guys. Take care. Bye.